It certainly appears that all of the memory companies, including and maybe most notably Sandisk, are having an NVIDIA moment.
It sure does. You pumped to talk about Sandisk?
I'm super pumped.
Yeah, you said Sandisk was cool again, and it took a couple months. And boy, has it been cool as the other side of the pillow.
Besides a public video on Sandisk several months ago, we have been talking about memory shortages, bottlenecks, you name it, with our semi-insiders because we're watching this very, very closely. We definitely want in on making some of the gains that are related to these memory companies, but we also want to make sure that we get out before the inevitable happens.
The music will eventually stop. And while we cannot put out a public video on everything we talk about, on all of our research articles, you can catch all of that over on Semiconductor Insider. We have some great tools that we're putting together as well. We have a financial data integration with fiscal.ai, so you get that. We also have some nifty stuff like a reverse discounted cash flow calculator, a very simple, easy to use discount cash flow calculator as part of that Semi-Insider research platform. We'll talk about that today with Sandisk and try to figure out what type of expectations are baked in to the stock price right this moment. But you can get it all at Semi-Insider. Seriously, if you haven't checked it out yet, please do so. We appreciate it very much.
Chipstockinvestor.com is where you can find that membership. And make sure while you're at it, hit the subscribe button on this video right here if you haven't already so you can catch all of our stuff. Now, let's take a little brief walk down memory lane. Sandisk was re-spun off early 2025 from Western Digital.
The hard disk drive company? Really? Wow.
We're also discussing that. Those are also cool again. Now, Sandisk has done some really interesting things besides jazzing up their logo. They've made this partnership a joint venture with Kioxia. And sorry if we've said that wrong in the past. I don't know if this is right, but it's definitely not Kioxia. Sorry about that.
At the very least, for those of you in Japan, we think Kioxia at least gets us a little bit closer to the correct pronunciation.
A little closer. Either way, they have this joint venture called Flash Ventures with Kioxia. Kioxia is the majority owner, 50.1%. They handle the operations. Sandisk provides cash to help cover equipment purchases, maintenance, and operating costs, but they also get the wafers.
And up to this point, the fantastic relationship for both companies. They're both getting wafers at cost as they build their SSD products. And since it's been working so well, in tandem with the last quarterly update, Sandisk, along with its partner Kioxia, announced that they are extending that agreement through 2034. The previous agreement was set to expire in 2029. So a 5-year extension. Sandisk said that it would be contributing $1.165 billion paid in installments over the next few years through 2029 to help fund some of the manufacturing capacity upgrades that are needed to support this whole NAND flash shortage craziness that's going on.
Now it's time to get into the numbers for Sandisk in this most recent quarter, because this is actually why we're saying Sandisk is having an NVIDIA moment. Take a look at the revenue that they just posted for this most recent quarter. Just for reference, Wall Street analysts expected around 2.7 billion for the quarter. And what did they actually come in at? Well, you can see it right there. In the January 2026 quarter, just over $3 billion.
Pretty good. Still not really an NVIDIA moment though. But if you look at the next bar over in this chart, this is where you get the pretty dramatic upside that has continued to push Sandisk stock higher. The analyst expectations on Wall Street were for about 2.9 billion in revenue, and the guidance just provided was a range of 4.4 to 4.8 billion. So Sandisk said, surprise, we've got perhaps upwards of $2 billion in extra sales that you didn't think we were going to report just in the next quarter alone, which will end here in the next couple of months in the spring.
That would be up 170% year over year growth at the midpoint.
Pretty impressive.
And it's also important to point out here that This outlook is direct sales to AI data center operators for their long-term storage upgrades. This is not to NVIDIA. They're still planning and designing getting NAND flash built into NVIDIA systems.
If you watched our recent video on the memory shortage and the memory hierarchy, the work being done there involves getting NAND flash ready to be more intermediary type memory. The position currently held by memory products like DRAM and perhaps even one day high bandwidth memory, HBM, getting high bandwidth flash or something similar to that co-packaged very close to the GPU. So as Casey said, that guidance does not factor for any design-in wins from NVIDIA as they roll out next-gen systems with Vera Rubin later on this year.
And this is not just about revenue expansion for Sandisk, this is also about earnings growth. Analyst expectations were around $4 for this upcoming quarter in March 2026, but management actually guided for an earnings per share on an adjusted basis of $13. That's right.
Yeah, $13. So what's happening here is this is the positive effects of operating leverage for a company like Sandisk that has a relatively high amount of fixed costs. And then when you get the positive effects of being able to raise prices on your products because of shortages that are happening in the market, a lot of that price increase that you add on doesn't increase your expenses. You don't have that much in the way of variable expense. And so that price increase on your product goes almost directly to the bottom line. That's essentially what is happening here. Now, that is a two-edged sword. Over on Semi Insider, we wrote an article and are having some discussions on this and how to factor this into your analysis and try to figure out what companies have lots of variable expenses versus fixed costs, fixed expenses. Really important thing to understand when you're trying to figure out the upside in a highly cyclical business, a hardware business, especially like Sandisk.
Speaking of upside, is there still upside left for Sandisk? That's really the question investors are asking right now. And it's kind of crazy to think about this. The stock is up over 1,000% in a year's time, but is there still room for this to continue?
Yeah, and this is where some of the operating leverage stuff comes into play. But just to get a sense of what is currently baked in right now, as we're recording this, we're sitting at well over $660 a share. Looks like maybe more like $680, $690 a share by the time the market opens on February 3rd. And by the time this video actually publishes, who knows where the stock price will be. But if you take a look at this, what is really baked in the way of earnings growth? We're going to use adjusted earnings per share just because that's the guidance. And we're going to just simply annualize that figure and use that as a starting point. So $13 per share annualized gets us to $52 per share. And at roughly $660 share price, that implies about 1% earnings growth for a year, and then a terminal growth rate of about 2% thereafter. Now, you may be looking at that and thinking, wow, that's totally crazy. Sandisk is ridiculously undervalued right now. There's a lot of room for this thing to run higher. And we agree. However, that forward-looking analysis has to factor for, at some point, the NAND flash shortage coming to an end, and then the inverse of operating leverage happening. Instead of getting really, really massive margin expansion, at some point, Sandisk and the memory companies will have to face some sort of cyclical slowdown or cyclical downturn where some of that elevated pricing comes off and the profit margins come back down to earth. That's probably why the market is letting this go for what seems to be such a cheap, forward-looking valuation based on this one scenario that we ran. And so now it's up to you to decide, do you want to play this game? This is definitely a momentum play, like all the memory IDMs have become to kick off 2026. How long will that momentum last? And do you want to try to figure out where it will top? Because it will most certainly find a top at some point, maybe later this year, maybe not until 2027. Who knows? Maybe not until 2028, but it will eventually find a top.
If you've been with us for a while here at Chipstock Investor, you have definitely heard us say that memory is a commodity. Has that changed? Is this an NVIDIA moment for memory stocks? Is it only going up from here? That's ultimately the biggest question. And there definitely are legs to the memory market right now. The hyperscalers are all racing to the next thing to improve data center performance. And NAND flash specifically could potentially encroach on the DRAM market. But there are some things that still need to be considered.
The biggest one is memory IDMs, SK Hynix, Samsung, Micron, Sandisk, the HDD players, so on and so forth, manufacture ultimately one product type or group of products, that being memory. And it's just one ingredient needed to build a final product, like a data center. That makes it a commodity. As advanced as the commodity might be, it's still a part or piece of a finished product. It's an ingredient. In contrast, NVIDIA designs and monetizes the whole supply chain. The logic chips, obviously, GPUs, now CPUs as well, networking, of course, power. They take a cut of the memory architecture as they build that out. They now have foundational software and AI models. NVIDIA produces a final product that spans the entire supply chain. And so NVIDIA's moment from a few years ago is not exactly the same moment that companies like Sandisk is having. So in our view, those are the puts and takes that you need to think about when judging whether or not a company like Sandisk belongs in your portfolio or not.
As we said, this is something we are watching very closely. We've discussed some of the bets that we've placed on these memory companies over on Semi Insider. If you want access to that, make sure you check out chipstockinvestor.com, where you can join the discussion.
And if you're looking for other businesses participating in this memory shortage, perhaps you missed this one right here on Seagate, the leader in hard disk drives, HDDs. Casey said if HDDs are cool again, you might want to check this out. And thanks so much for watching. We'll see you again real soon.